Markets in Sensex open in the green, tracking global peers. Sensex opens above 72,000, while Nifty above 21,700. And all sectoral indices trade mixed. Healthcare tops the list on the back of Cipla's strong Q3. On the other hand, media remains under stress. A Humpty Dumpty fall for Z as Sony walks out of the merger deal. Stock drops almost 10% in trade today as brokerages downgrade the stock. And pain continues for HDFC Bank. Stock exchange fall for the fifth day, erasing market of 28,000 crores in trade today. Meanwhile, it's a strong debut for Medi Healthcare. The stock lists at a premium of 10% on the NSE. Hello and welcome. This is Agam, Vakil. You're watching the F&O Show, a show in which we take you through all that is happening in the futures and options space in Indian equity markets. For now, we are looking at some amount of pressure return to Indian markets, and that is largely on account of its largest bank, HDFC, which is under pressure yet again. We have the Nifty, which is down, it's in the green by around 2%, but the mid-cap Nifty has, the Fin Nifty has declined by around 0.2%, which is, of course, facing the options expiry today, and the Bank Nifty is down around 0.4%. So while we do have strength in several other private sector banks, which would include something like a Kotak Mahindra Bank or ICICI Bank, that really has not been able to counter constituents of the Bank Nifty and take a look at where we are, in fact, looking at that weakness in terms of the F&O placements, specifically index futures. So you do have HDFC along with the HDFC Bank. Of course, we do have IDFC along with that as well, which is weighing down on the benchmark indices. Only ICICI and Kotak Mahindra Bank in the green at the moment. Save for that, everything else is weighing on the indices along with the markets. Let's take a look at the futures and options space, and at least as far as the Nifty futures go, while we are looking at its underlying moving up around 0.2%, we're going to have to pull up that on your screen, and there you're looking at a good 17% change as far as open interest is concerned. Let's move on and talk about the Bank Nifty as well. That's your Nifty future. So we are looking at a 3.8% increase in OI. Let's pull out the Bank Nifty futures and take a look at where things and how things are panning out. So while we do have a decline around 0.4%, but the Bank Nifty, well, the open interest hasn't really changed as much, just to the tune of 1%, no more than that. Let's move on and talk about how the options market is panning out at the moment. Remember, we did speak about the 21,500 put as the one with the max OI. And and on the top end, we are looking at the 22,000 call as the one with the max OI. So that's your distribution. That really hasn't changed as much in today's day of trade. But can we take a look at the change in open interest distribution and where we are seeing, in fact, a lot of increase in OI and a decrease in OI? Let's pull that up as well, and that should come up for you on your screen. So there you have it. While the Nifty has advanced in today's day of trade, there is a lot more writing in higher level calls, which would include something like 21,700 and 21,800 calls. That said, overall, as far as the Nifty is concerned, we haven't seen too much change, but the Bank Nifty certainly is under pressure. The question really is, what do you do from this? And at the moment, we are, of course, keeping an eye on a whole host of factors that are, in fact, weighing down on the markets. Let's pull up HDFC Bank and very quickly take a look at how things are panning out, at least as far as futures are concerned. Because remember, HDFC is declining for the fifth straight session, well away from the mark of, we were talking about, there you have it. So well away from the mark of 1,600 rupees per share. It's currently at around 1,450 odd rupees per share. And as far as your futures go, that's where we are continuing to see more selling pressure coming through. And in fact, HDFC Bank's market capitalization, our post-merger, has been so big, and because of that, its weightage has been so huge. We have a consequent, impact on both the benchmarks that could include the Bank Nifty as well as the Nifty. And HDFC Bank is now seeing a further decline of around 2%, even as we see an open interest unwinding of 5.4%. Of course, we'll continue to keep an eye on that one. Speaking of which, let's also pull up Zee Entertainment, right? Because Zee Entertainment has also been under pressure right now. And, well, for now, what we are seeing is, at least as far as the futures go, let's pull that up quickly and take a look at how things are, well, moving on. We're keeping an eye on Zee Entertainment. That should come up for you on your screen in terms of the futures. And all right, so it is locked in a lower circuit around 10%. It's in a F&O stock. But speaking of which, we have an NDTV Profit exclusive on the Zee-Sony merger collapse. And we have Tamanna, who's joining us to give us more. Tamanna, good morning. What are you gathering from your sources?
The big question in the run-up to what was being speculated for long, that was that the Zee-Sony deal would eventually come away, is what went wrong. Remember, these negotiations have been going on for over 3 years. There was an extension of a month in which good faith negotiations were on. So what finally happened? We now have the inside details of the last few attempts at having this deal go through. We have learned from sources close to the deal that 2 proposals from Zee were rejected by Sony towards the end, and an extension timeline request by Zee was also rejected. Now, what were these 2 proposals? Now, sources close to the deal tell us that Zee has been trying to get the deal through to the last breath, but eventually it was Sony that pulled the plug and, of course, had the upper hand. Proposal number 1 was that Puneet Goenka stays at the helm initially, that the merger go through as shareholders had envisioned and okayed it, but soon after the merger, both sides would sit across the table and hunt for a neutral CEO, one that would have been acceptable to both Zee and to Sony. That was rejected. Option number 2, or proposal number 2, was that Puneet Goenka stepped down. And remember, as we've reported in the past, that was a big bone of contention, though perhaps not the only one. So he did offer to step down, but he did want at least a seat on the board for the promoter family or a nominee of theirs. Remember, they hold about 4% share in the company. That was rejected as well. So what was Sony then okay with? What was their proposal, so to speak? Their proposal was that Puneet Goenka goes, no negotiation on that, and no board seat for Goenka or nominee. Also, they wanted, and were very clear, they've been saying that from a while, that NP Singh should be CEO of the merged entity. At the end of the day, and as sources have been telling me, it came down to a battle of egos. It was very clear that no side was willing to blink. Now, the question is what happens next? We know for sure, very clearly, that Zee is going to take the legal route. What are they challenging? They'll have to go to the arbitration tribunal first. They will challenge the $90 million demand that Sony has made for the deal to be broken off. They will also be going to court and making the argument that all the conditions for the deal that they were supposed to fulfill have been fulfilled on their side, whatever they could have done in their own capacity. They will also argue that there were a lot of costs that they've incurred as an entity to get this deal through, including the cricketing rights that they bought, including shutting down verticals in Japan and other nations which would have been competitive for Sony. So they have incurred huge costs. There is a likelihood that not only will they challenge this $90 million sort of demand from Sony, but come back with its own counterclaim. So watch this space. A lot going to develop from here on.
Right, Tamanna, thank you so much for getting us those updates. Of course, Zee under pressure on account of the several developments that are occurring. And, well, there's no respite at the moment, considering we are looking at further selling as far as Zee Entertainment is concerned. But we'll continue to give you updates. Of course, a lot of insight already has come through. But on that note, we slip into a quick break. But on the other side, we talk about, well, all that experts are recommending for us as far as markets go. Stay tuned in. Okay, well, welcome back. We're talking about another entrant in the, well, IPO space, and this time we have Medi Healthcare, which listed on the bourses with a good premium coming in. We spoke to the management of the company about the growth trajectory going ahead. This is what they had to say. Listen in.
The company, in its primary business, is a third-party health insurance administrator. The company has been around since 2002, and we work with our insurance partners or insurers, and of course give access to policyholders into a network of hospitals, and of course administratively manage the whole experience that relates to health insurance policies in India.
Sure, understood. Satish, if I can come to you, with regard to your top line itself, you've grown at 20% at least the last couple of years. Would you see that 20% plus kind of top line growth continuing, or would you see that as a challenge on the higher base as you keep growing?
Thank you for that. Maybe just with your permission, I'll just take a step back. We have three big revenue segments, right, within the India TPA business, which is the group where we work with over 9,500 employers, and in retail and in the government-sponsored projects. So in each of the three segments have different growth rates, and historically group has grown much faster than the other segments. But both in group and retail, we've grown faster than the market growth in the last 3 years. And we hope to continue to match the market growth rates or better as we move forward.
Sure, understood. So maybe market rate, but what's the kind of opportunity, Satish, if I can try and understand that? So you'll continue to grow at market, so you won't probably acquire new market share. But what's the opportunity like? You have a presence even in international markets. Is the opportunity pie large enough for you to continue to probably gain a little bit of market share as well? Just trying to understand some of those metrics.
Absolutely. We continue to be a very India-centric and India-focused business. See, the health insurance itself, by premiums, has been growing at about 20-odd%, year on year. And with the government's focus on health insurance for all, by 2047, we expect that growth to even accelerate even further. And within the group segment, we have about, by health insurance premiums, we have a 30% market share in the country. So there is still a significant room of growth that's available in the group business. And retail, we just even short of 10% by market share. So there's a significant amount of opportunity as we continue to add more and more insurers, even in the Indian market, right, to our retail portfolio. So there are no growth concerns. And just to clarify on the international side, so our international business is more an extension of what we do in India. As India Inc. globalizes, as Indian employers send more and more of their employees abroad for short and medium-term travels, we have now the ability to deliver the same kind of cashless, and the network services in over 140 countries across the globe. But we still continue to be very India-focused from an acquisition of business perspective.
Welcome back. Well, it's time to shift back focus to all that is happening in the futures and options space. Let's get in our experts for today. We have Vinay, Rajani, CMT, Senior Technical Analyst at HDFC Securities. And along with that, we also have Ajit Mishra. He's the SVP-Research, Religare Broking. Good morning to both of you. Thanks for joining in. Ajit, I start with you. How are you placed when it comes to the benchmarks? We have more weakness on account of HDFC Bank. What do we do when it comes to the Nifty and the Bank Nifty?
Yeah, good morning, Agam. So, Agam, last week in the final sessions, Nifty tried to make an attempt to hold the short-term averages after reclaiming it on Wednesday. But today, the way we are seeing that index majors, HDFC alongside with Reliance is pushing the markets lower. It's become difficult for index to maintain this 21,500 mark. So in case if we slip further lower and breach this level, I expect this profit taking or consolidation that we are seeing with the negative bias will continue in the market. There's a sell on rise market until we decisively reclaim 21,800 mark. And banking also in the last trading session, it was in fact banking which outperformed the index. But today we are seeing that all the gains were wiped out, and we are again inching towards 45,300. So banking, I feel that it's prudent to stay away because we expect this volatility to continue. We have other numbers also scheduled during the day among the private players. So Nifty definitely looks weak to us, and one can definitely look for a shorting opportunity. If the view is short-term intraday, then with the stop at around 21,620, one can go even short, even at current levels with 21,400 as a target.
Okay, Vinay, good morning to you as well. Your view on the benchmarks at the moment, how have you placed?
Yeah, so definitely setup has turned weak, and last week we saw Nifty falling by 1.5% and open interest went up by 12%. In Bank Nifty, we saw a short build up of 24%. So in both Nifty and Bank Nifty, last week's data suggested a weakness, and bearish engulfing pattern was also witnessed on the weekly charts of Nifty, and Bank Nifty was already into a downtrend. So overall, the trend was down because of the ICICI Bank's result, a good result. It opened higher, but somehow it is facing a selling pressure as of now. So I feel overall a selling opportunity at higher levels. In intraday, we have already seen a good amount of selling coming in, and the levels have changed in last half an hour or so. So 500 points correction already we have seen in the intraday in the Bank Nifty. So intraday pullbacks can be utilized to go short in Bank Nifty as well as in Nifty. So I would suggest that Nifty is currently future placed at 21,550. If it comes up around 100 points recovery or 80 points recovery at higher levels, one can go short. So I would rather recommend to go short on intraday rallies. A 21,600 can be utilized as a short level, and 21,700 can be kept as a stop loss. On the downside, I'm expecting that Nifty is heading towards the 21,400 target, and Bank Nifty around 45,900 one can go short with a stop loss of 400 points. So stop loss would come at 46,300. On the downside, I'm expecting Bank Nifty to hit a downside target of 45,200 to 300. So overall, intraday pullback should be utilized to go short in Nifty as well as on Bank Nifty.
Okay, there you have it. Largely a negative view coming in as far as benchmarks are concerned. From there on, we'll shift focus to all the stocks which are buzzing in trade. Before I do that, let's pull up the list of all the stocks which are seeing an increase in open interest in today's day of trade, whereby we can understand what's really going on. So pharma is at the top of your list. We are looking at Lupin and Cipla, which are looking at, well, a little bit of an increase. But Cipla, of course, is clearly the pharma stock of the day. We're looking at a lot of longs building in there. And we also have longs in Bharti Airtel. Bharti Airtel is also up and about, and a good 3% increase in its underlying. Dalmia Bharat and Max Financial, on the other hand, are looking at some amount of shorts building into the system. And in terms of stocks which are seeing unwinding, that is a decline in open interest, we are looking at Sun TV, GNFC and Bandhan Bank, all of them looking at longs unwinding. So the Gujarat Gas and Metropolis are the other two counters which are seeing about a short covering, but remember that underlying hasn't really moved more than 1%. I want to pull up the constituents of the Bank Nifty and take a look at where we are looking at a little more change. So as you can see on your screen there, there's no letting up on HDFC Bank. It declines, it continues to decline by around 2%, and the longs unwinding are to the tune of nearly 6.2%. ICICI Bank and Kotak Mahindra Bank are the only two counters on the Bank Nifty which are in the green for now. Save for that, all the other banks are under pressure, declining, and also looking at, well, some amount of longs unwinding. So we did see a bout of short covering last Saturday, but now Axis Bank, State Bank of India, IndusInd Bank, all of them are looking at further weakness and a lot of longs unwinding coming through. The question really is, can we in fact expect any sort of respite? For now, it doesn't seem like it, and there's more pressure as far as HDFC Bank is concerned. But let's move on and talk about picks from our expert. Vinay, I'll come to you. What stocks are you looking at, and what are they on your radar today?
So basically, we have seen some sort of profit booking coming to the PSU segment, and HPCL is one of the stock which outperformed till now. But kind of profit booking and the selling we have seen in the intraday session, I think this is the short-term downtrend starting in, and HPCL January future one can go short as a trading pick. So 450 to 453 is a level in January future. For HPCL, one can go short here, keeping a stop loss at 460. On the downside, I'm expecting a target of 438. So overall, OMCs and PSU stocks can come down a bit for the short term. So that's why I'm recommending going short in HPCL January future. On the long side, I would pick a stock from the pharma space, Zydus Life. So Zydus Life today is showing a great amount of strength. Sun Pharma, Dr. Reddy's, and other pharma stocks have been remained resilient in today's session. So I think pharma as a defensive sector can perform well in this kind of scenario. So I think Zydus Life January futures traders can go long at 718. Stop loss can be kept at 705 on the upside. Target can be kept at 745. So overall, Zydus Life looks good for go long, and one can go short in HPCL January future.
Okay, Ajit, what about you? What's on your radar today?
So Agam, obviously the pharma should be in your trading bets, considering that we are seeing excessive volatility when it comes to the index, and pharma sector is also holding strong amid all this volatile swings. So Dr. Reddy's, I feel, is one candidate that one can look at from the pharma basket. It's almost like 3 months of consolidation that we've been seeing in the stock, upper band around 5,900. After retesting the same, it retraced marginally towards the support zone of the long-term moving averages on the weekly charts, and now we are again seeing a base formation. So we expect this consolidation to end with the recovery, and 5880 is something that we are eyeing in Dr. Reddy's. So with stop at 5630, one can go long. Other name from the metal space wherein we are seeing consolidation and it's still not participating on the downside. So Tata Steel is showing strength, and we feel that as long as we are holding above 130 mark, there is a potential that stock may again witness fresh traction and inch toward 140 levels.
Okay, so those are two buy calls coming in from Ajit, Dr. Reddy's and Tata Steel. Of course, we have seen a big surge in pharma stocks, not just in Cipla, but a whole host of counters from the pharmaceutical space. Of course, we'll continue to keep an eye on that one. But on that note, we have run out of time on this show, so I'm going to take a moment to thank both our experts, Vinay and Ajit, for joining us and taking us through their views on the markets, as well as giving us a handful of trading ideas. Well, it's a wrap on this show, but lots more lined up on the other side. Stay tuned to NDTV Profit.